Scott Phillips from Motley. Scott, good evening to you. This is obviously going to have a negative impact, at least in the short term. What sort of a hit will it be to the economy?
Peter, good evening. Yeah, it will have an impact. We know the Greater Sydney lockdown was likely to cost the economy about $1 billion a week, and that's just for Sydney. We can assume a Victoria-wide lockdown will be something similar. Now, hopefully, neither goes longer than it has to. Of course, we want it to go long enough to have the health impacts that it needs to have, but right now the economic impact is significant. Mostly, I think the big issue is confidence. If we can bounce back from this one like we bounced back from the last one last year, then we're in a pretty good place. If we lose confidence, though, if we don't believe this is the last one or the government's not going to step up or we simply just have to watch our pennies, that's when confidence can really hurt, even more than the lockdown itself.
OK, because we did bounce back well out of the first lockdowns, didn't we? So that's interesting. It's about confidence. Financial relief packages are in place, but are the twin lockdowns likely to force a change to any economic settings by the government or indeed the Reserve Bank?
Yeah, that's a really good question. I think that is the confidence question. Look, the concern I have is last year we had JobKeeper and JobSeeker. They were really broad, really clear, really obvious, and everyone got them, at least if you qualified. It was a really simple one for businesses and consumers to understand, and we all felt like the government had our backs. This time around, there's a bit more of a hodgepodge. Some's federal, some state, disaster payment here, something else there. The real concern, as again I mentioned, is that we don't have that confidence impact. So if there are any changes required, I hope that the government is probably a little bit clearer and maybe a little bit broader to make sure everybody knows they'll be looked after and they can keep spending confident that we'll come out of this one in good shape as well. OK, finally, Scott, most of Australia's superannuation is locked into the share market. What are the share market expectations in the short and the long term if things don't turn around quickly? Yeah, it's a really good question. Of course, part of the rest is in property as well, and property prices will also come into focus if we do have a longer lockdown that does start to hurt the economy. In the short term, the numbers are pretty good. So far, the stock market's pretty much taken its lead from overseas rather than locally, and that's been good because the rest of the world seems to be getting on with things while we're locked down here. So that's a positive. Medium and long term, I think it really depends on the profitability of some of our companies, and that, again, relies on the health of the economy. It feels like a broken record story, but as long as company profits stay good, as long as the economy bounces back quickly, no matter how long the lockdown, the length is not so important. It's the speed of the bounce back that matters. So far, I think we're in a reasonably good place, but as always, we've got to keep a watching brief just in case things take a turn for the worse.
Everything's crossed, Scott. Scott Phillips, Chief Investment Officer from Motley. As always, thanks for joining us on the Late News.
Thanks, Peter.